Morning, Market Chameleons. Happy Tuesday. Soon to appear, Dimitri Pargamonic, King Chameleon. How are you doing, Dima?
Pretty good. How are you, Will?
Great, great. 9 o'clock exactly. You want to get right to the disclaimer? What do you think?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer questions, provide you with guidance. There's the disclaimer, everyone.
Excellent. What are you seeing this morning?
So let's take a look at the pre-market report. We'll go over a couple earnings released today and a couple that are coming up. If you have any questions along the way, let me know, Will. I'm going to try to answer as many of those questions before the end of the show.
All righty.
So this is the pre-market report, stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's first take a look at the higher market cap stocks. So I'm going to use this filter, market cap, look for 20 billion market cap or higher. And we see 6 made the percentage gainers list, 28 on the percentage decliners list. From that perspective, looks like it's more favors the bears at the opening. So you could see way more decliners than gainers. The one right now, I'm just kind of like scanning on the gainers list. KSU up 14.5% in pre-market. That's trading about 750,000 shares, 773,000 shares in the pre-market hours. Looks like there is some headline news there. I'll let you kind of go in there, read it, because I wanted to skip to potentially IBM. They reported earnings. So yesterday after the market closed, they're up 2.6% in the pre-market hours. And I think we wanted to talk about IBM a little bit before. We kind of never got to it because we got to other questions. So maybe let's take a look at IBM today. They reported earnings up 2.6%. Let's just go to that stock unless you have any questions on pre-market movers. Well,
nope, you can go, D.
Okay, so I'm going to go to IBM. Oh, one sec. Let's go to the IBM page. And let's take a look first on the earnings, what they reported versus what they were expecting. So here I'm on the earnings per share estimate versus actual. So here today they reported earnings. Sorry, yesterday after the close they reported earnings. For the first quarter, we see that they beat earnings on the earnings per share by 14 cents. They also beat on revenue, 390, did better by 390 million. Stocks up 3.1% in the pre-market hours. And the reason I wanted to bring up IBM, and I'll show you more of the steps that I was looking through, but kind of like the Warren Buffett approach, where you could buy sometimes good stocks at fair value, and certain stocks that are at fair value, maybe not growing as much, but there's a lot of intellectual property in IBM, because IBM is it's a technology company with a lot of patents, and they're working on things that I think could be potential hits, or something very big in the future. So we'll take a look at the valuation of IBM. We'll take a look at what they're saying in their report and kind of, make an evaluation from there. So let's first just take a look at their press release. So they reported earnings yesterday. This is their press release. That's what they're communicating to the investors, to the investment public. And this will have their GAAP and non-GAAP numbers, any type of outlook. So they'll issue a press release before they do their, official SEC filing, which are all just financials and GAAP numbers. So here we see in the first quarter, they're telling us, what they earn, earnings per share on a GAAP basis and on a non-GAAP basis. they're telling us here, this is what they generated in revenue, 17.7 billion, up 1%. So they grew their revenue a little bit, and this is kind of the breakdown. So they're in the cloud and cognitive software space, business services, global business services. They give you a breakdown for each of these segments, you know, how Red Hat did. I'm going to kind of go, just keep this in mind. So they did grow their revenue a little bit, not a lot. So right now they're not getting a high multiple because they've been having trouble growing that revenue. Their sales, it's kind of been flat or declining a little bit, but they have grown it, you know, at least stayed flat from, if we compare it to the previous same quarter period. Then the other thing that jumps, and I'm going to just, two things I'm kind of going to look for is their sales growth and their operating margin. And over here, I'm seeing that their gross profit margin was 46.3%, up 120 basis points. So that's good because they're increasing their gross margins. Basically, gross margins are if you take their sales and subtract what it costs to make that sale, right? How much is left over? So they're saying after, you know, after they sell it, there's 46.3 cents left over for every dollar in sales. Operating gross profit margin, 47.3%, also up 110 basis points. So these two, at least for IBM, I think are good news. And I'm going to kind of come down here, just see what they're telling us about their outlook. So this is for the full year expectations. So the company expects to grow revenue for full year 2021. They're not telling us how much, but we'll just give, since they're expecting it to grow, I'm going to enter into a model, a very low growth rate, okay? Almost even flat. And since they have improved their gross margins, operating margins, you know, I'm gonna also stick to the low end into our model just to see where we think the price of the stock is relative to the rest of the market. All right. So those are the two things I'm gonna quickly take away from their press release, that they don't expect their revenue to decline, to grow a little bit. Their gross margins have been increasing. Their operating margins have been increasing. So those are the two takeaways I'm gonna take when we come back to our fair value model. Any questions on that?
Nope, looks good.
All right. So this is what we're going to do. We're going to see where we think IBM should be priced around. So we know it's 136.50. We're going to see what do we think the fair value is. Do we have a cushion, you know, based on today's valuation? Do we have a cushion if we go into IBM? And then if we do, what do we think the growth prospects are? So we know one thing, they're in the cloud space, which is growing because we know Amazon, you know, they've been growing really quickly in that space. IBM hasn't been able to execute as well in their growth, but their technology is good. The other thing, they're working on technologies such as quantum computers. I think we mentioned that before. So quantum computing, if anybody's ever, you know, read just quickly about quantum mechanics, it's creating these supercomputers based on quantum mechanics that could do calculations so fast, you know, even the fastest supercomputers would not be able to handle it. And this will open up a lot of other opportunities in things like healthcare, finance, logistics. And IBM's not the only one working on it, but you know, they are in that space. And if you think of quantum mechanics, there's this, they call this, I think it's called quantum entanglement, right? Which Einstein said was this like spooky action between particles at a distance. And just to tell you how crazy this technology is, quantum entanglement is when you have two particles that are not connected, They don't communicate with each other. They're separated by space. But when you affect one of the particles, it has another one somewhere in space has a correlating reaction to it. All right. So this is like, and Einstein didn't even believe that that would be possible. I think then there's a scientist, John Bell, who said, well, let's do an experiment and to prove that quantum mechanics is true. So they're working on it. Google's working on it. I think Facebook's working on it, but they are getting a lot of progress. And you could actually go to IBM, and I think that they even give you like free space to try programs on these machines, as they're working on it. So what we're doing is looking at something that maybe is already priced at fair value given today's earnings, today's expectations for growth. And if that's a fair value, you're almost kind of getting these potential technologies for free, right? So you're not actually paying this big premium, and you're almost getting those technologies and those patents, all that stuff, that intellectual property that IBM has, you're almost getting that at no premium or no cost. Does that make sense? Well, let me know if everybody.
Yeah, no, that's super interesting. Interesting. Actually, NAG says IBM is one of the few companies who holds the research and training on quantum computing. So
yeah. So you got this, kind of, intellectual property in-house, right? That could be very valuable. A lot of smart people working on it, a lot of experiments, and let's see how IBM is valued today just based on their current revenue. So I'm going to go here to the fundamentals. I'm going to take a look at fair value just to get a sense where we think IBM is priced today. So there are two ways we're going to look at it. One is from historical multiples. So based on historical multiples, where are we at today, and based on our expectations or expectation growth in the future. So from historical multiples, here's what we see. We're going to take a look at IBM's 3-year average PE. So if we took a 3-year average PE and use that as our benchmark, this is where IBM would be the implied value, fair value. If we took 3-year average price to sales, so market cap divided by total revenue, trailing 12 months. If we use that as our benchmark, this is where IBM implied value would be. If we did the same thing with price to book ratio and price to operating income. Okay, this is where it would be. Then if we went a step further and said, well, where does IBM PE usually trade relative to the rest of the market? So right now, this is IBM's PE versus S&P 500. So it's trading at a 45% discount. 3-year average, it traded at a 39% discount. So if we use that as our benchmark, then IBM would be over here. And if we did the same thing, price to sales, price to book, operating income, we generated these benchmarks. If we took the average of all of them, we got 132.38. Stock's 133.12. So it's really in line with those historical multiples. And it's not taking into account right now today's report, because that hasn't yet been inputted. So if we take today's report, and it looks like they beat expectations and grew from the previous quarter, this might actually change a little bit and be at a slightly at a discount. That's what I'm inferring from this. So let's just say, according to this, we're right at fair value. What about taking into account future growth, future earnings, right? Because we don't only look at historical, but what do we expect IBM to grow at and earnings to be going forward. So I'm going to come down here to the model, and we're going to compare IBM to the rest of the market, S&P 500, which I use as SPY. And we're going to look at 3 metrics. One is operating margin. So if we just look at their core business, right? So how much money they're generating from their core business, and we look at the profit margins from that, and we're going to exclude any kind of other profits that they're making or S&P 500 is making from investments in other places like Bitcoin or whatever, right? Just their core business, their operating margins. We're going to look at their revenue growth, and we're going to look at the volatility, basically, how much it moves around relative to the market. All right, so let's use those three metrics to generate where we think IBM should be priced relative to the rest of the market. So IBM right now, let's take a look at the operating margin. Here is the current one for IBM 9% versus S&P 500 9.8. We do see that last 3 years on average it was 13.3%, last 5 years 14.4%. So it's been declining, but at least from the latest report, we saw that their gross margins and operating margins have increased. So I'm going to just keep it here at the low end at 9%, even though the last report has looked a little bit better. Now, what about their revenue growth? So we see here in the last 5 years, 3 years, and 1 year, it's been declining, right? That's why if we just defaulted to the last 3 years, we're saying on average, it's been declining 2.4%. This is why we're not generating anything, because we're not sure. But we see that IBM has, at least reported a flat to a little bit. The revenue has increased a little bit, right, according to the last report. And they're telling us that they expect it to grow. So I'm going to just go to the low end and say it's not going to decline anymore, but I'm going to give it a 1% growth on average per year for next 5 years. So that's what we're going to do. And I'm going to use that for the S&P 500. On average, revenue has been growing 4.4%. So I'm going to keep that in there, 4.4%. Okay. Then volatility, IBM, volatility 25.5 versus S&P 500, 18.5. So we'll keep that in there. And I'm going to regenerate this to get a fair value, and then we'll go over it. So let me know if there are any questions on this. I'm going to generate and kind of go over these numbers a little bit more. So I'm going to recalculate this. And if we take a look, where would IBM should be priced if we priced it relative to the rest of the market? We see that it's trading at a 37.5% discount. And I'm going to do a risk adjusted really quickly. So if I adjust it for risk, basically IBM trades at a higher volatility than the rest of the market. If we adjust it for that, it's trading at a 13.8% discount. So let's take a look at those numbers. So here we have SPY, IBM, S&P 500, market cap 37.9 trillion, IBM market cap 119 billion. Revenue in S&P 500, so those are total sales of these companies, 12.2 trillion, IBM 73.6 billion. So let's take a look in the next 5 years. If we assume S&P 500 on average grew revenues 4.4% year over year. So this would be year one, 12.7 trillion, year two, year three, year four, year five. For each of these years, out of this revenue, how much of it would be operating profit? Well, if we gave it a 9.8% operating margin, first year would be 1.2 trillion, second year 1.3, third year 1.4, and so on. So for the 5 years, total operating profit 6.8 trillion. That would be, remember, these are just estimates. We're guessing because nobody knows for sure, but we're just using our data to make an estimate. So $6.8 trillion in the next 5 years. If you generate $6.8 trillion in revenue, and if we bought all the stock out there in S&P 500 for 37.9 trillion, basically if we owned all of it, we get to keep all that profit. That would be a 17.9% return in 5 years based on that market cap. Okay. IBM, here we're giving it only a 1% year-over-year growth. So you could see here each year how much the revenue would grow by. And for each year, if we assume that 9% of that revenue would become operating profits, for each year, this is what the operating profits would be. So if the cumulative 5-year operating profits, 34.1 billion. If we went out and bought IBM, all the stock out there, owned it, we would be entitled to that 34.1 billion, right? So that would be a 28.7% return. So IBM, 28.7% return, S&P 500, 17.9% return. So you could see here, the red is the profits versus the market cap, S&P 500 market cap versus profits. So where would IBM be priced to make an equivalent to S&P 500 if we were just demanding the same return as the rest of the market? Then we would price it at 212.84. Okay. What if we adjusted it for the volatility? So if we adjusted it for the volatility, because there's more risk, 154.41. Okay, so at least by those estimates, right? By those estimates, it looks like either a fair deal or a slight discount. Okay. Any questions?
We did. Unfortunately, the chat's a little slower. Robert was asking, seeing that IBM looks like a future, what type of, well, Robert's asking about looking for trades that you may think about, but he was asking about revenue growth in IBM. Is it the rate of growth or actual growth? He thinks it may be the rate of growth.
So you have to estimate what you think on average it'll grow year over year, right? So since we're saying this is 1 year, each year on average it grows 1%. So you're giving it 1% from this point, then 1% from the new point. So it is growing, it's kind of growing 1% year over year, right? So I'm not taking 5% of the original, I'm taking 1% from the previous year, then adding 1% to the new, right, to the new level. Does that make sense?
Makes sense to me, Robert. Does that make sense to you?
So every year it'll grow 1% from the previous year. Huh?
Gotcha. Well, it's a couple minute delay between the two. So
okay, sure.
I would just move on.
Okay. So that's really quickly an estimate, right? All we could do is estimate. There's no definites here because nobody knows what's going to happen. But based on those estimates, it looks like here fair value or maybe slight discount. If we take IBM and then say, all right, based on this, if we give any type of value to what they're working on the future that's not generating any revenue right now, right? So technologies that they're investing today that it may be big revenue generators, then we're kind of getting that for free. It might not work out. You know, I don't know if the quantum computer, somebody else might come first, but if it works out, you're almost like getting that anyway for free. You're not paying a premium as you would like for some other companies where, you know, they might not be generating any revenue on projects, but people are pricing those projects in like that they're going to be big winners. So that's IBM really quickly. I have 5 minutes to go. If there are no questions on IBM.
Well, there was. Robert was asking, so if you are bullish, are there any bullish trade ideas popping up?
Right. So here, what I would do right now is I could go to the trade ideas. The problem is that IBM reported earnings last night, right? We did not open yet. The options did not open up yet. So we have two things going on right now. One, the price of IBM is going to probably, you know, even if we're taking a look at the pre-market movers, is going to open up at a different price. So they closed at 133.12. In a pre-market, they're 136.6. It's probably going to open, you know, if we just use that as our indicator, going to probably open up around 2.6%. The other thing that's going to happen is, since they reported earnings, the options themselves are going to adjust the implied volatility because the event already occurred. So that uncertainty is going to get priced out, and all the option prices are going to change. So based on those two factors, we don't know where the new option prices are going to be yet. So this trade cards right here are using yesterday's closing prices, right? Because that's all we have right now is yesterday's closing prices until the markets open up. But if we just wanted to take a look at it, you know, just as an example, if prices did open up, you know, close to here, here's a bullish bull put spread. And this would be a bull put spread is selling, right? Selling one put, in this case, April 23rd, 133 put, buying the April 23rd expiration 128 put. It's a $5 put spread, credit of $1.91. We think it's worth $1.03 based on historical stock behavior. So that's a 28.3% theoretical edge and a historical probability of success, 77%. So this is really, though, using, you know, stats. Right now, it's not a fair comparison because it is using stats and data pre-earnings report. So this card here, the machine is looking historically stock behavior pre-announcement, right? So that's the problem. For post-announcement, that's not going to happen until the market's open. Then the machines are going to start recalculating everything.
How often do the trade cards update, D? We just got that question.
So I believe it depends on the stocks. So the busier stocks, you know, like the top traded stocks, are like on a 5-minute timer, right? So you have to give it some time for the stock and options volatility to move. So it's like on a 5-minute timer, and then it'll go like to a 10-minute timer for like less busy and like something that just trades zero volume, very wide markets. It's probably like up to 15 minutes, depending on how the stock is moving. So if the stock is just kind of sitting there, there's no volume, markets aren't moving, it'll refresh less frequently. Stocks that are busier, a lot of volume, they're going to refresh quicker. All right, and that's just to make it more efficient in processing. So hopefully that helped answer that question.
Super helpful, D. As always, great show. It's like a webinar every day, dude. Awesome.
Well, hopefully that was helpful to everyone, and thanks everyone for joining. Hope you stay safe out there. Have a good trading day, and hope to see you guys tomorrow.
Excellent. Well, we did have a couple new chameleons who are on today. Listen, there's a group of chameleons who set up a Discord group that talk about all sorts of trade ideas in general, use a lot of different products. If you want to link to that group, email me. I put my email in the chat, but it's williammcbride@gmail.com. I'll get you a link to the Discord. Dima, great job. Thanks, chameleon.